Hi guys, this is Gold Mine FX. So I'm going to be briefly explaining how to identify higher highs and lower lows on the market. Okay, higher highs. What are higher highs? It is when the market reaches its highs and its lows. Okay, let me draw it for you so that you can see. So this is the market on the 4 hour or at the higher time frames. So we go. This is a low. This is a high which I'm creating right now, and this is a low, and this is a high. This always occurs on the market. And it's a thing that daily occurs on the market every time you trade. Like the market doesn't always work by people who are trading the market every day. It's just that people buy shares on the market too. So that pushes the market to higher highs and lower lows. Let me briefly explain why there are higher highs and lower lows and what is the reason behind finding them, identifying them, and what does it help you to do. So clearly here we have a low and here we have a high. So these highs and lows are broken, right? So what does that mean? That means that this low is a new one due to this being the lowest point and due to this was the highest point, right? So since it was the highest and it was the lowest, it was broken due to the company or broker that said we can't allow buyers and sellers to win at the highest and lose at the lowest. So what it did was it changed the structure. What is market structure? Structure, I'll briefly explain it on another video. Because right now I'm briefly explaining the highs and the lows. So clearly this is a new low and that is a new high which will be created at this area. This is a new high. So these highs and lows for people who are trading in the market, there are a lot of people who would be let me use it like something. Okay, some people would be like in the market wanting to buy to the upside, but they basically that is a high, right? Don't worry about this area. Don't worry about this area. This area is just a future or prediction, right? So people will be like selling at this area, be like, oh, the market's going down. But no, instead, it's going to push to the upside. People will be selling due to there'll be a lot of resistance and support at this area. People will be like, okay, the market is pushing down. Just add some orders. Instead, the market has a key area right here, which is like, okay, this area we're gonna use it as liquidity. Liquidity is gonna be explained briefly, but for now, there are sellers and buyers. For those who don't know, sellers and buyers are people who are buying that type of stock or selling that type of stock too. You get me? So people will be selling it and people will be buying at the same time. So the market, the job is for them to do is to actually predict the amount of people who will be in that stock, and then they will be consuming their money. Their money. It's like for me, I'm funding an account. I'm funding an account and I'm putting like $1,000 or 1,000 rand. And the market sees that I'm not an experienced trader. So what it does is it liquidates, it takes my money from my pocket and my funded account into their bank balance. So for you, what to do is I'm gonna be teaching you how to make profits from these highs and these lows too. How to make money, how to identify market structure, how to identify highs. So that's my job. So I'm briefly gonna be explaining highs and lows in this video. Okay. Okay, let's just like move out from here. Let me go to another place and teach you more briefly. So I'm also gonna go to the market and show you the real highs and lows. Okay, the market is going down, creates a low. The market is going high, creates a high. The market going low to create another low, and the market goes high to create a higher high, right? And then it does this: a little high, a little low, and then goes down, and then it goes up, and then it goes down once again, right? So the market is busy. The market all day always trades. So okay, let me show you, right? Okay. Um, we have a low, we have a high. So the high is always identified by its breaking another structure, right? So once it does break, okay, this was a high, okay, and it created a low, and then now it has a high. Due to it broke the last high that was there, right? So it goes down, it breaks a structure once again, and then this is a low. Due to it, there was a high, and then it broke a low. Now it's a lower low. And then it goes up once again. And then what is it now? It is a higher high. Due to it broke the previous high. So and then the market like it's not breaking this low once again. This low isn't broken. So now the question is where is the lower low and where is the higher high? So here the high is still there. It hasn't been broken. It hasn't been broken, right? So for you what to do is to identify higher lows and lower highs. Okay, so this low is called a lower high. You know why? Because it's low at a high. Like at this area, it is high, right? It hasn't reached any lows, so instead it's called a lower high. So let's go to lower highs and higher lows. This high is low under this low, higher high, right? So this is a low. This is a higher low. Sorry, this is a higher low. So it broke, went down, broke the lower high, and then it goes to a lower low high, right? This is a lower low high because it still hasn't broken this low. So this is a lower lower high, and then it goes up, breaks this higher low. Now it is a higher higher low. I know this may be hard, but that's exactly how to identify. This is a higher higher low. It broke. Now it's at this area of higher highs, but it hasn't broken that area, right? So it goes down, and then it creates a lower low. Because it broke this low, now it's gonna be called what? A lower low. So that's clearly for us in the market. I'm not gonna be like briefly explaining what we should do. So right now, this video is for higher highs and lower lows. So let's go to the market and identify these lower lows and lower highs. So let me first clear out the drawings. Okay. So here it broke, right? So I'm trying to show you the structure which I was drawing. Okay. So here's the high, previous high, and then we went down, and then he tried. This is called what? A higher low, right? A higher low. And then he went down the market. And then he went up. And then he went down. And then he went up. And then he went down. And then he went up. So tell me which highs and lows are broken here. Let me mark it for you. Okay. So this was a low. This was a low. And oh my god, fuck. My mistake. My mistake. Okay, this is a high. My mistake. This is a high. A high going down. You know, it hasn't broken this structure, right? This higher high. So this is what? A lower high. It goes down once again, and then it breaks this low. This low is broken, which was a lower low, right? So now it's what? This is the area, is the lower low now. That is created. That is created downside, right? So this is the lower low. Goes up, and then it breaks this lower high, right? So since this lower high is broken, this is a new higher low. So it goes down once again, but didn't break this lower low. It didn't break it. So this is what? A lower high. So this lower high is standing here. And then the market pushes up and then breaks this higher high. Once this higher high is broken, that's when we can identify the higher high. So okay, let me like okay. So this is the higher high, and then it pushes down to the market, but it didn't break this lower high, right? So what happens? It created a higher low. This higher low pushes market to the upside, but it hasn't broken this high. So which states as the market is possible to go to the downside and break this lower high and lower low, and it goes down, right? So what is our job to do? Wait till the market breaks this lower high, this higher low, and then we execute with money and orders to the downside. That's how we make money, by identifying high lows and lower lows. So that, thank you. This video is for higher highs and lower lows. Thank you.